first institutional manager in the blockchain and crypto space. Started back in 2013. We manage about $4 billion in assets today across early stage venture strategies, liquid token strategies, private token strategies, and special opportunities.
I'm Bob Rutherford. I'm the CEO of Clear Street Digital. I've been in the institutional space for about 10 years in crypto. First as an entrepreneur and a founder to a company that I later sold to BitGo, coincidentally enough. And then most recently, another crypto prime broker for the last 5 years. Clear Street is a prime broker in the traditional financial space, founded in 2018. They've been extremely successful, one of the largest IPO book runners for digital assets in the last year. And naturally, the extension of that is the creation of the digital asset prime brokerage at Clear Street, which I've been leading now for 3 months.
Hi all, Steve Scott. I work at BitGo Institutional Sales. Been with BitGo 3.5 years, come from traditional finance before, worked at Morgan Stanley for 18 years, looking after ETFs, asset managers, crypto native funds. BitGo is a digital infrastructure firm. We basically came around in about 2013, we launched. By 2018, we became the first qualified custodian here in the US. We service clients globally across multiple jurisdictions, including Europe and Asia. We have over 4,000 institutional clients on the platform. Our core functionality is custody, but we offer trade, staking, and financing on top of the product.
Great. With the title of the panel, it'd be great to hear from each of you where you're seeing demand and business opportunities from traditional finance, or as we say, TradFi.
Yeah, I'm happy to start. We're an investment manager, right? As I said, we've been in the business early on. The firm started really as a Bitcoin access product back when it was really hard and kind of scary, frankly, to source Bitcoin. Over the life of the firm, we've expanded the product set. But the story of investing in digital assets, certainly for the early stages, was really a retail story, right? Retail and family offices. Institutions selectively were interested, primarily hedge funds and some asset managers. But given the regulatory uncertainty, the legal uncertainty around the space, it was hard for big institutions to really commit, right? Lots of projects behind the scenes. That fundamentally changed, right, a year or so ago with the new administration, with the passing of Genius, and now hopefully, increasingly with the Clarity Act coming to fruition. And so what we're seeing, which I think is fundamentally different than if we were having this conversation a year ago, is very large institutional allocators completing their internal review processes and really thinking about where digital assets fit in their overall allocation strategy. And that really spans, I would say, the gamut from listed products, ETF wrappers around Bitcoin and Ethereum, et cetera, to, all the way through the earliest stage venture type style investments that we're making. And so fundamentally different environment today.
Bob, what about from Clear Street perspective?
Yeah, I think probably, over the course of the last year or two, we've really seen a bit of a blurring of the lines between traditional financial products and digital assets. They're no longer sort of siloed. Some of this is due to changing regulatory environment. Also, a lot of it is due to the maturity of the ecosystem and the strategies that clients or funds like Pantera run, where the ability to go get your service from sort of one-stop shop in the world of digital assets is no longer sufficient for you to run your strategy. There are opportunities in the market between listed ETFs, digital asset treasury companies, exchange-traded products in Europe, and more native digital asset instruments, right? Whether it's spot transactions, transactions or futures, all of these things sort of have to be accessible to a client in the same space, so they get the benefits of cross-margining, of risk netting, the wrapper, the financial services that they're used to receiving from their bank or financial institution. This has been a long process in the market, and we're really probably still at the very early stages of seeing the results of what that convergence looks like.
Yeah. I mean, at BitGo, we're talking to a wide range of clients, from crypto native to now fully TradFi, banks and broker dealers. If you go back a few years ago, TradFi really wasn't there in any meaningful way. It kind of shifted with the ETFs. That really was the first thing that we saw from our side of the business where, bridging that first gap where traditional investors were getting access to a product into Bitcoin, Ethereum, Solana, down the chain. So that has been a focus, and that continues to be a focus now that most of the core ones are on the platform. There's still new launches. There's new providers coming onto the platform, and there's new products coming in within those coins. So eventually the ETF product will probably have a huge selection of clients to be able to trade through a ETF product. If they don't want to touch spot, they can touch it through a securitized vehicle like an ETF. So that was one area that I think will continue. The next one was the digital asset treasury, was a big theme that came at the end of last year. That's obviously slowed down into this year. But what really came from that was, once again, listed vehicles on exchanges that people could trade. That bridged the next gap that was out there for investors. Now it's shifted again, and it feels like 26, 27 is the year where the banks and the broker dealers and the real sort of hedge funds start looking into this space. Everyone needs a strategy. Everyone's trying to come up with the best ways to do this, who to partner with, what's going to look like for their firm. So we think that's going to be the next growth in 26, 27, is really having these two worlds combined. That's probably somewhat through tokenization, is that first sort of gateway into coming into the digital asset space. But eventually that should fully fall into the digital asset crypto environment as well.
Yeah, I would just add to that. I mean, to me, there's two stories here, right? There's, from the investor perspective, there's an education and an adoption story, right? And we're still, well, we've made a tremendous amount of progress. We're still at the place where investors need to understand what the products are, how they work, how the sort of settlement and custody and prime process works around digital assets. And, across the spectrum from retail to sovereign wealth funds, there's different levels of engagement and education. And then on the financial institution side, on the banks and the asset managers, it's really, to me, about a kind of an integration conversation and an acceleration. So looking at what people have sort of built behind the scenes, how they connect to businesses like yours, right, that are sort of leaders in the space, and how we're really looking at how is the back-end plumbing across custody, prime, settlement, and clearing going to work in this world, right? And we've solved some of those problems. We've still got more work to do.
How have you seen that progress over the last couple of years, just the advancement on the custody side with some of your partners, including BitGo?
Yeah, I mean, you guys are a great example, and Pantera was has been along for the ride with BitGo very early on. Our founder Dan Moorhead has been an investor and partner of Mike's really throughout the life, and super excited and happy for you guys to now be a public company. Listen, I think firms like yourselves have largely solved the custody piece of the pie, right? And so, when we're talking to big institutions about allocating to the space, whether it's on our liquid strategies or in our venture strategies, the first thing they want to understand is safety and security. Yep. And so, that is the cornerstone on, how all of the financial rails are going to get built. The prime services business has made significant progress, right? There's more work to do on that side. Getting to cross-margining, accessing liquidity across fragmented spaces, real-time settlement. We still have work to do on that front. Crypto's kind of a strange asset, right? Because we sort of solved the last piece of the puzzle, settlement first. And now we're sort of going back and building all of the other pieces. And, you guys are the ones who are leading the way.
Yeah, just from there, Bob, it'd be great to hear about ClearStreet. Obviously, you made some announcements about growing in the digital asset space, including you coming to help lead those efforts. Where is your focus? What does that look like? And what timelines? And are there any regulatory hurdles that are still needed to get over for you to really scale as a broker-dealer?
Listen, we'll get the elephant in the room off the table right away. I think we would all appreciate a fit-for-purpose piece of legislation that addresses the unique aspects of digital assets. Yep. Throughout the world, many other governments have figured out how to get to that point now. I feel like we're making tremendous progress, and I hope we continue to do so. From our perspective today, we feel like we have the appropriate regulatory footprint to offer the services that we want to offer. You know, at the end of the day, sometimes we need to remind ourselves, or maybe we just need to do better at messaging to the general sort of audience that you know, we haven't recreated the rules of finance here. We've sort of reshaped how finance works. That, you know, securities are still securities, and commodities are still commodities, and derivatives are still derivatives, and you need partners who understand both the technology, right, but also the financial services components, the laws, financing, risk, in order to sort of combine those two together. Where Clear Street sees the opportunity, and the reason I was brought here, was that the market has matured incredibly fast. You know, 2-3 years ago, you might have had fund managers in the space who never traded options. You know, they only knew about linear risk, and you were explaining to them what it is that was, unfortunately. But you know, since then, you know, the talent in the space has increased exponentially. You have a lot of really smart people who see opportunities, who see the future projection of where we're going. They understand the vision, and you know, at the end of the day, we're in financial services. Our job is to provide to our clients what it is that they need to be successful. And that's where Clear Street has really stepped up, right? So whether you want to cross margin, spot Bitcoin against your, you know, long Solana position, whatever it is that you need, we're here to provide that service, right? And so when I think about where we're going, you know, Clear Street is a large financial institution. They have regulated entities all over the world. They're an FCM, they're a broker dealer, they're a swap dealer. They're in Canada, UK, Singapore, all of these places. And it's our job to sort of remove this sort of burdensome technology, regulatory stuff, to take care of that for our clients, make sure that they have a great custodian who they trust. You know, you alluded to it earlier, the security component has sort of been obfuscated away from the sort of frontline manager. They know that BitGo is a good custodian. They have faith in the tools that you provide, that you sort of have everything figured out. And likewise on the prime services side, I think it's coming around where, you know, the things that clients need to be successful, we can provide.
Yeah, I think, you know, one point you made, which I think is spot on, right, is, you know, the early focus was basically just getting long the asset class, right? It was, how do I actually own the asset? How do I own it securely? You know, how do I then transfer the asset? And it was really about, you know, getting that exposure. And ultimately, as more sophisticated players come into the space, as more people in the TradFi world, whether it's on the hedge fund side or the bank side, you know, traders going to trade, right? And so, you know, they want more interesting ways to get exposure, to hedge that exposure, to express their point of view, cross assets, cross markets. And so that is what's going to continue to drive, right, the complexity, the development of the products, and the support around it.
Yeah, and it's good for our industry and for the market in, you know, in totality. It's not great to have everybody pile into the same long directional bet, right? Like, to have a well-functioning market, you need to have both sides of every trade. So then we've seen some of that, some of the volatility that's sort of been lessened over time.
And then Steve, from a BitGo perspective, BitGo received the OCC charter in December, became a public company on the New York Stock Exchange in January. Been an exciting few months. How has that impacted business and some of the opportunities that you're working on?
Yeah, so 2 major milestones there for BitGo. Obviously, been going since 2013, so you're 13 years on to get to this stage. I think when you're dealing with crypto firms, you know, people really it's a due diligence process, and people put the highest regulatory they can on an entity. And that's where we stepped up from a state chartered to a federal chartered. Makes it a lot easier for us to do business here in the United States across all 50 states, whether it's custody or trade. It's simplified it for clients as well as for BitGo. So that just opens up a huge amount of clients to be able to come and have those conversations with us that maybe previously were not able to. Being a public company, obviously be able to see transparency and quarterly reports, etc. Once again, public companies may only want to face other public companies. So these are just things that sort of tick the box. And what it comes back to Scott saying is, like, crypto is all about product, and allowing people to trade their assets, stake their assets, or do whatever they need to do in DeFi, etc., is the focus. The concept of having this security and safety and OCC charter is the tick the box exercise that you have to have now. And the rest is really producing the products and differentiating how you can give people access to, you know, investments that they need to get across the ecosystem.
Then Scott, from a Pantera perspective, obviously one of the largest asset managers in the digital asset space. Thankfully, today is a nice update, but generally it's been a rough couple of months in the digital asset space. How's that impacted your investors and some of the strategies that you're thinking of rolling out this year?
Yeah, I mean, listen, I think one of the challenges we have a little bit of as an industry is that the vast majority of people still think of the industry as what price is Bitcoin trading at. And, either the industry is doing well or it's doing poorly based on where Bitcoin is. Certainly, if you're long Bitcoin and it's the largest asset in the ecosystem, it does have an impact. But the industry is so much richer, right? And so, there is a, long tail of other significant tokens, right, that can be actively traded, that have real liquidity, that you can, go long and short and spread against, et cetera. And so, active management, hopefully if it's doing its job, right, is able to make money in up and down markets. For our core business, right, which is investing in early stage founders and builders in the ecosystem, and now increasingly as those companies grow, have recurring revenue, get ready to go public, most of those are independent of the underlying price of the tokens, right? And from an investor's perspective, when there is a reset in pricing in the market, that's generally a better entry point for valuations, right? And to some degree, we're still a nascent industry. There's still a smaller number of dedicated managers focused on investing in the space, but market resets like this tend to clear the tourists out, right? The builders stay, kind of long-term investors like ourselves find more opportunities, and we tend to earn higher returns through the cycle then.
Well, I don't think we can have a panel talking about digital assets in the combination with TradFi without talking about tokenization. It comes up in almost every client conversation that we have, especially with a lot of the large broker dealers. I want to start with Steve. What are you seeing in tokenization? What are going to be the impacts this year, and what do you think are going to be the long-term impacts of tokenization?
So we've been to many conferences where tokenization was a topic, and we were on the crypto side of the equation. So it's interesting to see almost two sides of the coin working here: the tokenization side and the crypto side. Now that's starting to combine across the platform. Initially, it started with things like money market funds. BitGo looks after many market funds, including Wisdom Tree and others. They're on the platform, so clients can actually hold tokenized money market funds on the platform. But that's now started to really morph into tokenized equities, tokenized commodities. BitGo just recently did an exclusive deal with Figure. They put their equity onto Provenance chain, and we were the exclusive custodian there. So we're starting to see like the traditional hedge funds starting to come into this space, and you have to keep your assets with a digital custodian. So it's an educational process for a lot of these newcomers into this space, but ultimately it's blockchain behind it all. So whether it's ETH or Provenance or Canton, any of these types of blockchains that are potentially going to be used for tokenization, it's starting to merge. So I think in this 26 phase, we're really going to start to see this accelerate, and there's going to have to be all service providers, third-party vendors come onto this and start to really service the industry and grow here.
I think there are opportunities in tokenization. Well, first of all, that we as a panel probably haven't even sort of contemplated yet.
Yeah.
Ultimately the market will dictate to us whether a certain tokenization project is good or not valuable or has utility. But I think that there are things going on in tokenization that are potentially really game changers. You see tokenized credit facilities and ABSs, right? And the transparency that you get through that, the ability to move that and use it as collateral in other positions. That's the real utility I see, where tokenization actually does have a profound impact, right? Where you might have some ownership over a private credit instrument, right? A structured credit facility. Now, normally that money would just be parked there, and you'd get your 7% yield or whatever it was, and 12 months you could withdraw if you wanted to. But now all of a sudden you have those future cash flows that have been securitized and tokenized sitting there, and you can reuse that money to go post as collateral to your prime broker, or to work in a lending pool, or all of these things, right? That I think that's the really exciting part of what tokenization is going to bring. Not the fact that we've just tokenized an existing product and put it somewhere else, but the utility that occurs from the tokenization.
Yeah. Yeah, you can join the audience over here if you like. I think one of the other elements that's really interesting about tokenization is creating new financial products in terms of like fractionalizing risk and tokenizing different slices of risk. And so thinking about different ways to construct portfolios to really sort of focus on what are you interested in hedging out or what are you interested in sort of gaining exposure to. So I think I agree. We're going to see a whole nother raft of financial products once we see tokenization more broadly.
I think tokenization needs to find its key to making everyone's life better, right? And that's speed, cost, efficiency, and that's still to be worked out here. Like I think at this stage, there's still where that kind of fits in, the 24/7 trading and settlement. So there's a lot of work to be done here, how traditional products fit into this tokenization. Most traditional products are working on a T1 basis or T2 basis for settlements. So what does that look like if you move down to T0 instant, right? There's a lot of things that will have to be worked out in this process, but ultimately it's all about automation and making lives easier for
a lot more capital efficiency, much better sort of margin.
Scott, Pantera was quite active in the digital asset treasury space. Invested in several that really got some sizable assets under management. What's next for the digital asset treasury space? Do you expect consolidation, or you expect some new ones to continue to launch?
Yeah, so I mean, last year was really the advent of DATs. Our partner Cosmo Zhang, I think, is the progenitor of the term DAT.
Yeah.
And I think he said, and we've said, when we first sort of started in the space, right, post Strategy and Bitminer, we're really excited about the structure, right? The idea, very basically is a digital asset treasury being an active management vehicle for the underlying token as opposed to the long-only passive ETF type exposure. And lots of different flavors, obviously, then given some of the other operating businesses. What we saw, obviously, was an explosion of activity in the space. The concept caught on. And I think what we expected certainly was some consolidation.
Mm-hmm.
I think given what we've seen overall in asset prices, and then on top of that, sort of the complexity of the DAT wrappers, some of the specifics around the funding deals, whether they were SPACs, or shell companies, operating businesses, it's a complicated story, right? And I think where we see this going is ultimately DATs will be a long-lasting structure in the market. It's a new way, for public market investors to get exposure, but we are going to go through a period of consolidation. And I think we're going to start to see that, starting to see a little bit of it. I think we'll start to see that accelerate over the course of this year. And my guess is with the major tokens, you don't necessarily need 10 separate DAT strategies. You probably need 2 or 3 that are really the core drivers.
I think also with DATs, it was like, how do you differentiate? Like it's ultimately like an ETF as well. It's like, what asset am I going to do? Am I going to do multiple asset? Am I going to allow staking? It's getting that reward generating in the fund as well, which you may be restricted at the time in ETFs. So that does give more flexibility to underlying investors because of what they can do in those products. But that's definitely something that I think you'll see that grow, and some 2 or 3 large ones in each one of those chains will probably dominate the way that happens.
I still think it goes back to the education point, which is like at the end of the day, right? We're still telling the story of what Bitcoin is and why Ethereum is different and things like that. And if you think about how financial products are distributed, particularly to retail investors, you've got to tell that story. Then you have to tell the story of how it exists in a 40 Act wrapper, and then you have to tell the story of what a DAT is and how it's different than an ETF. So there's a couple layers of education we have to still get to for broader adoption and turnover.
And I think for all the panelists, what do you think are the potential market drivers that could lead to a rebound in digital asset prices, and as well as what you think the biggest downside risk is in digital assets currently?
That's why I'm not a portfolio manager.
Yeah.
I don't like to call tops and bottoms because I'm always wrong. I mean, we're at this kind of interesting inflection point, if we can all take a step back, right? The mental hurdle of breaking through 100,000, where Maybe some long-term holders were suddenly willing to take profits, whereas they weren't before. And the sort of swapping of institutional capital into the space versus, the really early stage capital, I'll call it. And so that combined with, what is a very cyclical market, sort of maybe compounded the price action a little bit, but ultimately this is not outside of the sort of bands of what we normally see in digital assets or any emerging, sort of technology investment. I think the future catalyst is after we see that sort of shake out, we sort of get back to a normalized spot. The institutional capital, the people in this room, people like ourselves working in the space, we're continuing to invest. We're continuing to make inroads with more traditional allocators, more traditional asset managers. We're continuing to meet them where they are, right? Not just be sort of selling, you need to be having a Bitcoin allocation, but how do digital assets fit into your strategy, right? And so the inflow of institutional capital, I think, will only continue to sort of rise the tide of all boats in the long term. And I sort of see that as less of a flashpoint catalyst and more of a sort of slow growth stage over the next year or 18 months.
I would just say last year, digital assets pretty much got everything from the administration that they really were looking for. And the price still went backwards through that period into this period. Obviously, there's Clarity Act that's still open for finalization, and hopefully that gets through the system. So I don't think there's any one catalyst that really drives this. I think it's really for us to build product and to keep slogging away to give clients the best experience they can. Downside risk, it's an unknown in digital assets. It seems to be very volatile to macro events. So I think it's just an unknown and it's just a volatile risk on asset.
Mm-hmm.
Yeah, I totally agree. I think this is just going to be kind of slow and steady growth through this period. All the things that are kind of happening behind the scenes, on the institutional side, whether it's, the largest asset owners in the planet getting to the end of their evaluation period and now starting to make allocations to managers like ourselves, whether it's the big wirehouses that have shifted from, we won't own any of these assets for clients to we'll do it to reverse inquiry to now we need to have the best managers and the best products on the platform. Those transitions take time, but we're going to wake up in the not too distant future and we're going to see overall ownership of the asset class significantly higher than it is today.
Well, look, I think we've had a lot of examples of digital assets transitioning into traditional finance, and another example of this is just the crypto pavilion, right? Which this is our 4th year at the conference, and it's great to see year over year how many more digital asset managers and service providers are here. I want to thank you all for joining and thank our great group of panelists for all their great content today.
Thanks very much.
Thank you.